Alrighty, I'm showing 2 o'clock. Let's go ahead and get started. We're all very busy business professionals, and thank you for taking the time to join me today. My name is Paul Santomauro. I'm Director of Lending and Risk Products at FRANdata. For those folks that are new to our sessions or have not heard of FRANdata before, we are the leading research and information company covering the franchise industry today. Our main clients are three main groups. So lenders, the folks on the call here today that are making loans to franchisees. Franchisors, the brands themselves, are another client group. We do credit underwriting and performance for them. We do benchmarking and research, development projects for franchisors. And we also work with suppliers, and that's our third client group. That could be anybody that's selling into those two groups. Think about equipment suppliers for franchise businesses, all the way up to private equity firms that might be investing in franchising. And we are also the research arm of the IFA, the International Franchise Association. That's a little bit of a background on FRANdata. The folks that have joined us in the past, though, I'm really excited about today's presentation. I got a lot of new slides in here, about 80% new content. So folks that have seen our webinars before, I've got a lot of new stuff to share with you. And a lot of this is from what we've been seeing in the lending space from our subscribers over the last 4 or 5 weeks since our last session. So today's going to be a lot about latest issues in franchising. We're going to start with an update on our SBA eligibility certification. Some of our previous sessions have talked about our certification. And as we've worked with franchisors and lenders, we've evolved that document. We've added in some different features. So I want to talk about the current certification and then just do a quick refresher on how to access. So we're going to talk about just how to request them, how to get on franchise registry and look at those. Then I'm going to sort of set the table for our case examples, which I'm really excited about today. Just reviewing some of the topics and things that were hot button issues at the America East Lender Conference, which was, I think, about 2.5 weeks ago, 3 weeks ago now. But some of those topics are leading into these case examples that we're going to look at on the call. So we're going to look at 2 screen out letters from a franchise brand. The concept is called Game Day Men's Health, and that's going to allow us to look at some of the issues that SBA is evaluating when looking at eligibility, and specifically what a lender can and can't rely on the SBA to do for them in their loan. And then the second case example is from a deal that a bank brought us. They had made a loan to a franchisee, had some issues with the loan, and there were some rights that were conferred to the franchisor in the agreement that the lender had never seen before. And for us, these were some things that were pretty common in franchising. So I thought it'd be a great opportunity to look at those examples, what the lender dealt with, and actually dive into the franchise agreement in that case to point out some of these rights that may be present in the franchise agreement you're dealing with, and to make sure that you pay attention to those. Melinda just put in the chat that if you have any questions, just go ahead and submit them. We've built in some time at the end of the presentation to address those questions, but if something comes up topical on a specific slide, I'll try to peek at those and make sure that we can address them in the moment if they're relevant. So don't be afraid to send your questions as the presentation is ongoing. So as I said, I want to start with recapping our certification process and then showing you the new form of certification, which has some additional elements in there that are addressing some issues that we've found with specific brands and through working with lenders in the certification process. What I'm going to show you on the screen is an SBA eligibility certification that is signed by the franchisor that outlines more than 30 elements that are non-affiliation eligibility concerns that may be present in a brand's franchise agreement, and is being signed and attested by the franchisor that that agreement that you're using in your deal does not have any of those eligibility provisions that are going to cause issues for SBA. So franchises are going to sign this agreement that attests that their agreement is eligible. We're going to make these certifications available on franchise registry for lenders, and we're going to show you how to access those. And we will be, and we have been issuing updated certifications throughout 2024. So some of these brands signed a certification in late 2023. As their new agreements have come out, they've updated their certification. So that's an ongoing process that we're doing for lenders and the franchising community. So pay attention to that. I promised us a look at the certificate, and I want to take a look at this now. So folks that have been on calls before have seen a similar form of this agreement, but I want to go through and highlight some of the elements that we've added into this. This document is specific to a brand. So at the top of this, we're going to have reference to the franchisor. So if we're looking at Tropical Smoothie or Sport Clips, we're going to reference the name of the brand here. The beginning of this document is putting some teeth in this and having the franchisor understand that the statements that are made in this document need to be true and that the SBA lenders are going to be using this for SBA eligibility certification. And that's the first part of this document. Franchises are certifying that the statements and information provided are true. They understand and acknowledge that participating lenders of the SBA are going to rely on the certification for determining eligibility. And the franchisor acknowledges that the certification is material to participating lenders and are essential for participating lenders to enter into a lending transaction. Any information that is submitted with an SBA application that is subject to federal laws are subject to, for example, damages under the False Claims Act. So we're putting in some serious teeth here that franchisors know that this is a document that's going to be used with official SBA lending, and that all the statements that they make in here need to be true. Then we are going through and we're outlining a list of specific non-affiliation provisions that may be present in a franchise agreement that are going to affect your package's eligibility. Now, what's new in this is the ability for the franchisor and the lender as well to note where specific elements may or not be applicable to their deal. So I've highlighted a couple of these that we're going to just roll through. So first, if the franchisor has subordination language and documentation, they're certifying that that document does not include non-disturbance in a language. So we can still use a franchisor subordination document, but they're certifying that it does not include this non-disturbance in a torma language, which is ineligible. And they're going to check there if that's eligible or applicable for their deal. Recording restrictive covenants and restrictive deeds against the real estate is something that is ineligible with SBA. And this is again pointing that out, that the franchisor may not record against the real estate any deed restrictions that restrict the use of the property or any restrictive covenants. And that's something that plays into our case example. So that's an important thing to pay attention to. Business model eligibility is something that we're going to look at. And we're going to look at this specific issue with the screen out letters with Game Day Men's Health about restricting patronage based on race, color, religion, sex, handicap, or national origin. We're going to look at an example of this. But if that franchise model markets to any one of those restrictions, if it's a race restriction, sex restriction, anything like that, the franchisor is going to have to sign an affidavit that their franchise business is open to all willing customers. And so this is an important point, and you'll see it in the screen out letter where this came up. But lenders need to understand that if this franchise business is in any way sort of indicating that they are targeting one sex or race or religion over another, they're going to need to sign one of these affidavits, and you want to pay attention to it in the eligibility certification. Some of the other stuff that we cover here, live performances of a purely sexual nature. We talk about businesses that are speculative in nature, and with respect to the franchise space, certain types of development agreements may well offend this. So we're looking specifically at master franchise agreements and area development agreements, and looking at the situations where they may or not be eligible. So we need to make sure that we're paying attention to that if our borrower is using a development agreement or a master franchise agreement. We talk about passivity and passive business. There is some language here about sale of CBD products and that it cannot be more than 5% of the revenue. So we've really gone through a lot of detail here to make sure that we have all of these non-affiliation provisions. And at the bottom of this document, it is signed and executed by a representative of the franchisor, typically a chief financial officer or someone of that nature. Once this document's been signed by the franchisor, we list it on Franchise Registry for you guys to access and download. And we're going to go through that here in the next couple of frames so you can see exactly how you would determine, do we have a certification? And if not, how to reach out to FRANdata to get it. Question was asked, will this and other document samples be available after the webinar? Yes, we're doing a recording, and I can provide the sample documents and things to you guys afterwards. So we'll definitely have that for you guys there. So that's the form of the document that we're looking for. Now, if we go back to the slide presentation, how do we get a certification? I'm going to do a screen share in a second, but we want to check Franchise Registry. That's our website. It's www.franchiseregistry.com. Everyone on this call can get a login for Franchise Registry. We have a subscription subscriber base that, we do a lot of services in underwriting and business development, but for the eligibility piece, you can be, as long as you're an SBA, conventional, or any type of lender, you're able to get a free tier login to be able to access any of the certifications that are there. So be checking Franchise Registry as early as possible. If the brand doesn't have a certification, reach out to us as soon as you can. There's a mainline email, franchiseregistry@frandata.com. My email address, anyone on our team, reach out to us and let us know that you have a deal. We're going to reach out to the franchisor get that certification signed and posted on franchise registry as soon as we can. Think of this as sort of a community of interest where when you're getting a certification, every other lender that has a deal is going to benefit. And the same thing for other folks. Every other brand that they've gotten certifications for are listed for you. We've got about over 300 franchisors now that have signed the certification. There's no cost to a lender to get that certification signed or to download one from franchise registry. There is a cost to the franchisor. It's a small yearly fee that we charge brands, like $800 a year. You're going to see the franchise registry website. There are some brand facing things on there. We collect their contact information. We display their franchise disclosure document, their FDD for lenders. We'll create their fund report and share it with them so they know where they're strong and where they're weak. So another aspect of the service we do for franchisors is the certification. But I just want to let lenders know it's free for lenders, but there is a small fee for franchisors. But again, they're taking care of this once, and it's going to cover every deal that they have throughout all of SBA. So a brand that's growing, even at a small pace, will benefit from coming on franchise registry and getting on the website. So that's how all that works. I wanted to give you a quick look at the franchise registry. It's going to be on the underwriting tab. So I said before, everyone can get a login for the site. We talked about free tiers. So let's just dive into the franchise registry site, and I'll show you exactly where you can search for this stuff. As I said before, our website is franchiseregistry.com. Get you a login. You'll log in with the site, and you're going to be deposited on the homepage, just a search page for all franchise brands. And this is where you can come to search for any franchise. We're looking at the eligibility certification, but don't forget the franchise disclosure document and those other elements that the franchisor provides can be really valuable as well. Just think about, hey, my borrower comes in looking at sport clips. I can pull disclosure documents without going to my borrower. I can look at great clips. I can look at super cuts. I can start to do some evaluation of peer brands and their performance, even if I don't have the documents from my borrower. So there's a lot of value there in that. But what I want to show you guys is on the underwriting tab. So you search for the brand. We're on the general tab. Now, I mentioned contact information that we get from the franchisor. We're going to kind of cruise over it this time, but those are key contact information for roles in the franchise. So franchise financing is a contact to reach out to for any underwriting questions and performance. Franchise sales is a biz dev contact. So if we're trying to grow within a specific brand, we want to reach out to that person. And the SBA contact is a contact for any process issues in the filing of the SBA application. So that could typically means the receiving of the signed franchise agreement prior to first disbursement of funds. But any SBA sort of process folks or relationship folks, if you need anything from the brand, you want to go through that SBA contact. So that's just a word on the contact information. But the underwriting tab is where you're going to have all the reports. Now, I'm showing you what a subscriber login looks like. So you're seeing the ability to download fund reports. But what everybody on the call is going to have access to is the ability to download the most recent FDD, the disclosure document, and then the eligibility certification. So you can see right here now with Sport Clips, we've actually, since the last call we've had together, we've gotten them to sign their 2024 eligibility certification. So this is, typically what you would see with a brand that's now done it 2 years in a row. You want to get the most recent certification. So in this case, you want to download the 2024. If you see nothing there, no certs, or just 2023, that's when you want to reach out to us. This is the email address that I mentioned earlier, but my email address works. Some folks may also know Tony Seepy on our team. You can reach out to him. That's the kickoff point to reach out to the franchisor, get him to sign it, get him to have it listed here. Figure about 2 weeks. We've done it earlier. We've done it within a week, but figure about 2 weeks of a turnaround time. So again, as soon as you get these deals, let us know so we can get to the franchisor. If they need to involve their legal team to review it and turn it around, that's where might come up against that 2 week turnaround time. So that's everything on eligibility, the new certification, but moreover the process of recognizing if they need one and then reaching out to FRANdata so that we can get to the franchisor to get these things signed and listed for you guys on franchise registry. Question was what the typical turnaround time was, but we answered that, about 2 weeks. So, and the gentleman with this question also talked about new franchise brands, even build in a little bit more time if this is what we call an emerging brand, right? So for us, an emerging brand is any brand that has less than 5 years in operation, 5 years of FDDs, and 50 franchise units in the United States. So the newer these folks are, the earlier you want to get to us. especially if maybe they've only had a couple of loans or they've only had 1 or 2 years worth of FTDs, it's about setting them up on the franchise registry and really going through their documentation. So it might take a little bit more time with the really, really newer concepts. Great question so far. All right. Now I want to start to wade into part of the presentation that's new, and I'm kind of excited to share with you guys. But I did want to show again the hot topics for America East, because it pretty well definitely transitions us into what we want to talk about, because these have been hot topics for lenders for the last couple of months. But from the SBA conference, with respect to franchise lending and eligibility, the biggest talking point was, how is everybody confirming eligibility? Are they engaging the franchisor? What kinds of questions are they asking? What are the hot button issues? The consensus among the attendees was three main ways of approaching eligibility. Some banks are taking an internal review approach to this, where they have folks that they have a comfort level in, that have been doing franchise lending for 20, 30 years. They've seen a ton of agreements. They understand what the hot button issues are in franchise agreements, some of the types of things we're going to talk about when we talk about step-in rights and those things. So they have experience and a comfort level with the bank. So there are some internal folks in some institutions that have been assigned this process of reviewing for eligibility for specific banks. Other banks, as you know, are using the FRANdata certification, the process that we just talked about and went through here. And other lenders are using outside counsel. There are plenty of great franchise attorneys out there. We know Starfield, we know Nick Jellum. So there are lots of outside counsel attorneys that folks are using, and that's another way of approaching eligibility. So there's a lot of sort of different approaches out there in terms of how to deal with this issue. The next two big issues on everyone's mind were about the SBA directory and submitting agreements to GP for eligibility review. And we're going to address both of those issues here in our case example, about whether or not we can rely on the directory and what some of the pitfalls are of doing that, and what happens when we submit a package to GP for eligibility. Are they going to review eligibility? What are we going to get back from that? So I'm not going to answer that question yet. I'm going to wait till we look at the case examples. But one of the other questions they were asking was, what does the SBA SOP say about prudent lending to franchise borrowers? We're not going to talk about underwriting on this webinar. We've done previous sessions where we've looked into the FTDs. We've talked about how FRANdata evaluates franchise performance and what some of the metrics are, and sort of created a rubric for lenders to go through evaluating performance. But from an SBA SOP perspective, friendly reminder, when we're talking about franchise loans, there's some specific language to franchise lending that apply to specific loan groups and uses of capital within the SBA program. So with respect to our 7A loan program, for loans greater than 500K, so this isn't in our smaller loan group, for all loans greater than 500K, this also applies to the cap lines in the international trade program, that we must discuss other relevant information. They say specifically, if the application involves a franchise, the lender must review any credit information provided, such as the number of failed franchises and cash flow projections by the franchisor. So we know we have to look at that. And for our 504 folks in our CDC credit memorandum, we talk about independent studies or reports that may be beneficial in mitigating any weaknesses identified in the credit analysis, and they call out franchising specifically. Examples of these independent reports may include franchise assessment reports. So the SBA, while they may not put such a fine point on what prudent lending is and what that means, they have made some very specific lines that have been drawn about franchise lending and what must be done to evaluate the brand alongside the borrower. So make sure that we pay attention to that. All right, we got a question we're going to address at the end. So that is still top of mind for folks, that when there's a franchise loan, we really need to understand how the brand is performing alongside the borrower. How we get there, whether we do an internal review, whether we have FRANdata, someone else help, is up to the bank to determine. But that is front and center when we talk about what is required from the SOP in terms of evaluating performance. But on this presentation, I want to focus on some of the other elements and the case examples here. The first question from back there from America East was, can we rely on the SBA directory and can we submit to GP? What happens when we do that? The first case example here, for these, we have two screen out letters. One case example is for a brand called Game Day Men's Health. Now, we received both of these screen out letters from one of our subscribers. They had two different deals for this brand. They put both of these deals in separately through GP, and they received two different screen out letters from SBA respective to this brand. Screen out letter number one noted a business model issue with prejudicial concern. So this goes back to what we looked at when we looked at the certification, right? In terms of discrimination, religion, sex, race, all that kind of stuff. This is saying we have identified a business model, eligibility issue, prejudicial concern, men's wellness clinic. SBA requires a signed affidavit by the applicant stating that it is open to both men and women. Evidence that the facility is open to both men and women, such as appropriate bath and locker rooms or documented membership demographics to our satisfaction. Let's focus on that. Well, okay, but what does that mean? Why are we talking about this? Well, because we're asking, can we rely on the SBA directory? Well, what did the SBA directory say about game day men's health? We can still access the directory, even though the SBA is not updating it. They still have a copy of it that they've left online. And as I start to think about this more, I start to think about what is the wisdom of leaving that up there, because it can create issues like this. This is a copy of what is listed today on the SBA directory for game day men's health. You can see in the eligibility note, it's a long thing. I kind of cut it, put it underneath. There's nothing in this eligibility note that says anything about gender discrimination or needing that affidavit for changing rooms for both men and women. So if I was to rely just solely on the SBA directory, I might not have gotten that affidavit for bathrooms and changing rooms or whatever's required for game day men's health, because for whatever reason, it wasn't in this eligibility note on the SBA directory. But when we go to the screen out letter, they're very clearly saying that this is an issue for SBA eligibility, so you have to deal with that. The second piece that is going to show up again on the next screen out letter is that number two, where they just sort of say, lender to confirm if this is an SBA approved franchise. So GP processing is not going to confirm. We're going to let the lender to confirm that this is an SBA approved franchise. That is not going to be coming out of GP. So we have two things happening here in this one. One was, hey, the SBA, what was listed on the SBA directory wasn't sufficient for what the SBA looked at when we sent this into GP. So our ability to rely on the SBA directory and what was there is becoming less and less and less as we get farther away from May 2023 when the SBA SOP changed. And that was really what the takeaway was from the America East Conference. One of the panelists in our franchise session was saying, hey, from an institution perspective in her bank, they're not looking at the directory anymore because there's been changes to franchise agreements that have gotten so far away from it. So that's an important thing to pay attention to and really jumped out at me when I looked at this example with Game Day Men's Health. Now, let's go to the second screen out letter. Okay, so same brand, different deals, and a second screen out letter that came in. Okay, actually, I jumped ahead. I had two slides on this, so I talked about it. SBA screen out letter one also made it clear that SBA will not give an opinion on eligibility. It's up to the lender. Okay, so we just talked about that. Screen out letter two. This raises similar issues with different language. Okay, so this is saying we're going to forget about point number one that's talking about the credit elsewhere test. Point number two is saying provide your assessment of eligibility, specifically as it pertains to the restriction of patronage. The franchise name is Game Day Men's Health, which appears to suggest that the borrower services are provided to men only. Please note, if this business restricts patronage for any reason other than capacity, it is not eligible for SBA financing. So it's saying the same thing, but it's saying it in a little bit of a different way. It's saying, hey, my eyeballs are telling me it's men's health, so we're going to need this affidavit that says it's open to both men and women. So they brought up the same issue here. But I also want to talk about item number four, because this even puts a finer point on the fact that lenders cannot rely on GP to determine franchise eligibility. They're just coming right out and saying it. The LGPC does not provide an opinion on franchise eligibility. Please contact your local district office for more information regarding the franchise review process. They did contact the local district office, and it started the loop-de-loop back. SOP, here's what it says in the SOP, and boom, and we're going around again. So this is really showing us in the real world, the lenders that are sending this stuff into GP, what they're getting back, and we're very clearly seeing you cannot rely on them for eligibility. They're just going to kick it back to you and say, you lender, you have to tell us whether it's eligible. We're not even going to opine. And again, some of these issues where it wasn't in the SBA directory. So if we're just relying on that, if we're not using our brains or we're not understanding, what's required in the SOP, we're just going to gloss right over Game Day Men's Health and maybe not have that affidavit that's important for eligibility. So that I thought were really two really relevant examples in terms of screen out letters that I want to talk about with those. The next example I want to give is around language that's common in franchise agreements. At least from our perspective, it's common. But we recently had a client come in with a loan issue. And as we started to unpack this, we realized that the lender had never seen some of this language and was surprised that it wound up being in the agreement that the borrower had signed with the franchisor. Long and the short of it is this: the bank had called in for help with a loan to a car wash franchisee. And they made this loan early in the year, 2024. So they made this in February of this year. And immediately the borrower was struggling and wanted to get out of the business. And they had a plan to sell the real estate and all the business assets to a new buyer. So that borrower already went out, found a new borrower, got an offer letter, did everything. But the franchisor, the original brand that sold this to the borrower, is blocking the transaction and threatening to exercise a whole host of rights that they have under the franchise agreement, including step-in rights, their right to step in and operate the location, and something called liquidated damages, which we're going to look at, which essentially says that if a unit closes, I, the franchisee, am going to owe that franchisor an amount of money that is equal to a certain period of lost royalty revenue that they would have received if I kept up my end of the bargain and kept that unit open. Okay, so this was something that the borrower was trying to cure, and the lender said, hey, great, they found some folks to buy this. The franchisor immediately sent a cease and desist letter to the prospective buyer. And because this loan was made in February 2024, they did not have the benefit of using the SBA directory or Form 2462, which had some language, which has language in it around when a franchisor can step in, what liquidated damages can be, that this lender did not have the benefit of because they never got SBA Form 2462, and they didn't understand what some of the fundamental language points would be in a franchise agreement that could impact their package from a credit perspective. And that's what was really important here. So what was the lender asking? They're basically coming to me and asking, well, how does the franchisor have such expansive rights in this situation? I don't understand how they could have the ability to step in and take the unit, or to charge my borrower, $500K, which is what you're going to see here, if they go ahead with this sale. The answer is that these rights were conferred inside of the franchise agreement. And while these issues may not be an eligibility concern, they are still a credit concern when it comes to franchise lending. And the participating lender was not aware that any of these clauses were present in the borrower's agreement and loan package. And it may well have affected whether or not they would have done this loan if they were aware that some of this language was in there. So let's dive in and actually see what some of this stuff is. So the first is step-in rights. So what's happening here is that this borrower, to not go into too much detail, this borrower was trying to sell the Tommy's car wash franchise to another car wash company that was local to the market. It wasn't a national franchise company, but it was a company that had maybe 20 or so car washes in market, and Tommy's was trying to penetrate in market, and they had maybe 4 or 5 units. One of these franchisees was one of those. So they are threatening to exercise their step-in rights to say, hey, wait a minute, we're going to step in and operate your business because you're not operating it in the way that we deem it should be. And if you effect a sale to someone else that we have not approved, we also have right of first refusal to do that, and we have the right to approve any new franchisee that you sell to. Okay, so this is step-in rights that said right away that if there's any issue, for any reason Tommy says you're not operating the franchise business in the right way, they're going to go in and step in and take over that unit. So that's an important thing to look at step-in rights when you're looking at a franchise deal. Here's the right of first refusal part of things. It says that if at any time you decide to sell the business ownership interest in Tommy's, you have to submit an exact copy of that offer to the franchisor, and then they get 30 days to have the right but not the obligation to purchase all the Tommy's business and said assets for the price and terms and conditions contained in that offer. So if you're going to sell to anyone, they have the right to approve that person, but they also have the right to take over that business themselves, and they have that right of first refusal. So you have to know when that's at play in a franchise agreement, and what are the conditions by which a franchisor may exercise that right to take that unit over. And here's the transfer restrictions that we're talking about. So if your borrower wants to sell, most franchisors have restrictions that say we have to approve that new owner in the system. Now, we also want to look for language that says that approval shall not be unreasonably withheld. So we look for that, okay? But there are certain conditions that a prospective person, a buyer, are going to have to meet to be able to take over that unit. And one of them in this case was, of course, having adequate financial resources, but that transferee executing our then current Tommy's business franchise agreement. And this was the sticking point with this transaction, because it was a competing car wash company that was buying this unit. So there was no way in the world they were going to execute the current franchise agreement for the competing brand. And this was the grounds by which Tommy's said, if you go forward with this, we're either going to take the unit, or if you decide to sell anyway, we're going to charge you liquidated damages. And this was kind of the final nail in the coffin on this deal, which said that in the event that you sell or transfer this franchise unit prior to the end of this term, and the new owners do not execute franchise agreements, you agree to pay Tommy's liquidated damages equal to the average monthly value of royalty fees you paid during the 12 months of operation preceding the effective date of the transfer, multiplied by 120 months or 500K, whichever is greater. So I've seen liquidated damages that wanted 3 years of royalties, 4 years of royalties. This brand's going to take 10 years worth of uncollected royalties out from your borrower, or 500K, whichever is greater. So the borrower is in a tough spot, and the bank now, where they have a buyer that wants to buy. That purchase transaction would cure the SBA loan. The franchisor is blocking it, and the borrower has one of two options. They have another offer from an existing Tommy's franchisee. Of course, that offer is below the offer that they've gotten from the competitor. They could take the lower offer, or they could sell it anyway. That's going to cure the SBA part of things. The borrower is going to be left with a $500,000 judgment from the franchisor, and that's going to likely end in a personal bankruptcy. So there's really not a lot of good outcome here, especially from the borrower's perspective. But I just thought it was a great opportunity to look at all four of these issues and put them out there so that you're aware of things that you should be looking at. We look at when we do an evaluation of franchise performance in our fund report, we have a franchise agreement assessment section that just looks at stuff like this from a credit perspective. We're not worrying about eligibility in the franchise agreement review. We're looking at clauses like this that may affect my package on the back end that are going to be a credit concern. And the big letdown here was that this loan had only been out for like 7 months. Like I said, they did it in February of 2024. They didn't have the benefit of Form 2462. They didn't really pay attention to the eligibility piece. And now we've got a loan that's defaulting in about 6 or 7 months. So not a great outcome from the institution. But again, I thought a great opportunity to just get more awareness of this out to the folks on the call today. So that's everything that I wanted to get out with you guys. As I said, it was a little bit shorter today. I know a lot of times we go deeper into underwriting, but I thought it'd be great to just do something new and look at some hot topics. So hopefully you guys thought that was beneficial. I don't think there's any more questions here in the chat. So I'll give you another minute or two, maybe to just put something in. We are going to show a survey at the end of the webinar. So I'd love to get your feedback on the format today. If you like this kind of stuff, if you think, hey, I'd love to see more case examples from the franchise world, we can do more of that stuff in the future. I'm going to leave my contact information up here, and we'll give everybody another minute or two in the QA, and we'll go from there. I think there was one that I said I was going to answer later. Okay, yes. So question was, if the franchise agreement is the 2023 agreement, a 2023 eligibility certificate is acceptable and we would not need to look at the 2024? Yes. You want to make sure, you want to ask two things. You want to ask your borrower for the disclosure document, the FDD, that they received from the franchisor that covers this agreement. And on that is going to be an effective date, and that's going to tell you the date that you need. Don't go by when they signed it, because you could have signed, in January and it's a 2023 agreement. So just, pay attention to that nuance. Ask them for the FDD and look at the effective date. Another question, have you had franchises deny signing the certification, and what should lenders do? We have. We have had pushback from franchisors. This is not, something that they automatically always sign and just kind of go with. There's sometimes pushback. There's sometimes us needing to explain the hows and the whys of why they're doing this. And occasionally a brand may want to negotiate and have a specific issue or conversation about language that's in their franchise agreement. So that's something that may come up, but we're front ending that for you. We're helping you interact with the franchisors when this comes up. So we can help you on a case by case basis when that happens. Okay. The example that was shown, what would be a reasonable penalty to pay for early termination or transfer with no sign up? Reasonable, like I said, I've never seen 10 years worth of uncollected royalties. Typically it's a 3 to 4 year number. Reasonable is up to your own devices. I think 3 to 4 years is fine. 10 years, that was, to me, it was an eye popper. To say, like, you're going to close your unit today, but I'm going to collect 10 years worth of money that you said you're going to be open, but you closed. Most of them are 3 to 4 years, so 36 to 48 months in that calculation, not 100, 120. All right. How do we obtain the subordination document from the franchisor regarding subordinating their interest in business assets? If they're using that document, right? So you're going to have some franchisors use subordination language, some don't. So if they have one present, then they are going to, they have indicated in the certification that they're willing to sign a form of that document that subordinates their interest. If they're a brand that's doing a lot of SBA loans, they may well have a form of that agreement already. But if they don't, then you're going to have to go and create it. We can help. We can refer to attorneys that can help to do that. Most of the brands that are going to have that have an agreement because they've done some SBA loans before, but in a case where they haven't, you'd have to create it. You have to get it made from scratch. Okay. I think that's everything. Thank you guys so much for attending. We really appreciate it. We're going to do the survey and hopefully we'll see you again in another session real soon. You guys have a wonderful day.